Happy Money Monday, guys.
Sunny!
Thank you so much for watching our videos. We're here. It's episode 6, guys. We are still here. We're still going. We're consistently bringing you the content that you guys signed up for. And thank you so much for watching. Speaking about watching, please watch the video till the end for a little something for anyone or everyone who's actually going to watch until the very end.
Ooh. Ah.
Thank you so much for the continuous support, guys. Today, we will be speaking about money matters within the insurance part. Hopefully, we give you some sort of questions and alignment on how you can tackle certain things within your money and your insurance. I hope you enjoy the video. Let's go.
Is it just me?
Sign it.
Oh, Monday's looking blue. Monday's looking blue. What do you wanna do with the money? What do you wanna do with the money? Spend it or invest it?
Signing out.
Hey, Liberty Guy,
Hey, Thomas.
which insurance should we go for?
No, I'm just joking. But I'm not joking. Being that I'm the Liberty Guy, I'm going to give it to you straightforward. Have you ever heard the statement that the grass is not always green on the other side? Could just be astroturf. I think the most important thing for you as a client when it comes to looking for the right insurance is to sit down with a financial advisor who's not going to be about transaction, about premiums and forcing you to do things that you're not comfortable with, but rather someone who's going to sit down and find out about what are your needs, what are your wants, and together you guys can come in alignment to start creating something that is for your future and for your family's generational wealth. So I always say a good advisor listens before he speaks. That's why we have 2 ears and 1 mouth. So we have to listen twice as hard, and when we speak once. So it's about building a relationship. I, as a financial advisor with over 200 clients, I always say to each and every client that I meet and sit down with in the beginning that I would like to know if there is going to be a relationship to build with you and grow old with you. Because when it's good, I'm there. And when it's bad, I'm there. So moral of the story, I am there. And that's what your financial advisor from the insurance that you're looking at should be doing for you and saying with you. I hope that helps.
Hey, Mr. Moeketsi,
Yo,
if we already have employee benefits, do we still have to go and get our own personal benefits?
sure. To answer that question, yes. Yes, you do need to have your own personal benefits. Your employee benefits are really your benefits for work, you understand? So basically, just a quick example. Should you decide to leave company A to move to company B, whatever it is you had with company A falls away, and you'd have to start a new plan within company B. And now that doesn't help you because whatever it is that was put in place for you at company A doesn't really match whatever it is that is going to be within company B. So you're starting afresh. The benefits of having your own personal finance is that whatever it is that you put in place is with you from the moment you put it in place until. So it makes more sense to have your own personal wellness, your own personal fund, your own personal portfolios put in place. Sit down with a financial advisor and actually go through what you need so that you actually know that, you know what, you actually covered. And, you know, it's not a bad thing to have your company benefits and your personal finances done as well. It's a good thing, you know, because you covered on both sides. Hopefully that answers your question, man. Hey, Liberty Guy,
How's it, Tom?
what type of insurance should we buy for tax reduction?
How many of us like paying tax for starters? Let's start there. Because I know we're always talking about tax, we're always talking about this, but no one really likes to pay it. But guys, we're going to be talking about tax reductions versus tax avoidance. We should not avoid paying tax, otherwise you're going to be in trouble. Aye, papa. So the great product that we normally use to reduce your taxes starts off with the retirement annuity. Now, retirement annuity can give you up to 45% tax payable from SARS. So think about this. How many of you are paying or contributing towards a retirement annuity, also known as an RA? Think about it carefully, because if you're not contributing, you're losing out on money. The government, in simple terms, ladies and gentlemen, does not want you to be their problem. Abumdende and, on all these other grants, they don't want that. And they're giving you an incentive as an employee or as an entrepreneur or as just a human being who is thinking of ahead. How many of you ever heard that statement, begin with the end in mind? A retirement annuity is that end in mind, because you're putting away money towards the end where when you reach the ages of 60, 65, 70, do you still really want to be working as hard as you are currently now? Do you still want to be grinding as hard as you are now? Or do you want to be able to say to yourself, by the time I hit those pinnacle ages, I want to be able to start paying myself an annuity income? And just to give you a rule of thumb or an example, that it's really important to start saving now and letting compound interest build up that wealth for you, so that by the time you turn the 60, 65, 70, you've got money saved. For every R1,000,000 that you invest in an annuity income, that's just about 5,000 Rand return that you'll be earning as a month to month. So I want you to start thinking carefully now, is how many millions do you need to have in your retirement savings in order to replace your current income so that you can live a comfortable life? Food for thought.
Hey Thomas,
Yo,
if a family member has a history of blood pressure, diabetes, or cancer, will that affect their health insurance?
sure, that's a good question. Yes, it will affect your life insurance. Your life insurance has so many things that factor into you actually getting the life insurance. We look at things like your life, your education, we look at your income, we look at your health background as well, your history, right? So if yes, you do have a mother or father who has some sort of history with diabetes, cancer, the works, it will play an effect on your own life assurance. Because now, within all of that, you have to consider that the lifestyle in which they lived, the lifestyle in which you live, the genes, all of that play a part in you getting the life cover. So yes, the insurance company will say, okay, fine, we will take in your life cover, we will accept you and give you the life cover, but it will come at a cost. And that cost is them saying, you know what, we're just also making sure that we are also protected because you already have a history of this. So in an event that it does happen, it has been counted and it has been taken care of. I hope that answers your question.
Hey Liberty Guy,
Hey Thomas.
what should we do if we cannot afford insurance premiums anymore?
Hey Thomas, you are asking a question that's hot on every financial advisor's book, should I say. Look, it's all about communication at the end of the day, because understand this, ladies and gentlemen, when you get a financial advisor, you are not necessarily paying him. The insurance provider is paying him for the premiums that they're collecting from you to protect your life. Now, I do understand that life does happen, and I do understand that, our budgets sometimes go a little bit off whack from month to month, but if you ever have to find yourself in a financial pickle where now you have to decide on, do I pay for my life cover or do I pay for petrol or for Netflix? This is the part where you need to just rope back in your financial advisor and just have a discussion with them as a human being, heart to heart, and say that, look, I'm not coping right now and I think we need to go on to a strict budget plan. And your financial advisor will be able to help you out with it. Personally, when it comes to me, I always say to my clients, let's bring your 3 months bank statement. Let's look at for the last 90 days, what kind of a trend financially has been going on in your life through your bank account. And that's where usually you start seeing some truths. And I need you to also be honest with yourself, guys, also. It's very important that you need to look at what are my wants and what are my needs. Your needs have to be addressed first. Needs are things like putting a roof over your head, making sure that you have fuel, because a car is no longer a want, it's a necessity. Making sure that you have food, making sure that you've now paid for your respective subscriptions like your life cover, your medical aid, your retirement annuity. So those are very important. Once those have been covered, then you can start looking at some of your wants, like maybe going out, like maybe taking your partner out on that, once a week dinner date. Whatever the case may be, you cannot go on to wants prior to needs being addressed. So it's always about doing that budget exercise and looking at that, because from being able to look at your wants, you are able to trim, to make something a little bit smaller and work for you for that month, so that at least instead of you canceling a policy, you can actually look at one, either pissing and making your wants a little bit smaller or less, so that your needs are taken care of. Or the last thing, which is something that we try and avoid, but it's better than a cancellation, reducing some of your values on your cover, be it reducing your life cover, be it reducing your critical illness cover, be it reducing your income protection. I don't like to talk about them to say that's the first place you can go to reduce, but I want you to know that reductions can happen because maybe at that time you're in, things are going a little bit tough and you need just a little bit of room so that you can breathe, so that when things get better again, you can then go back to increasing them to the places that they were or further. I hope that answers your question. Yes, sir, ladies and gentlemen, we're at the end of today's wonderful episode 6. I want to thank you so much for paying attention. Thank you so much for engaging with us. And thank you so much for liking, subscribing, and following our YouTube channel. We did promise that we have something exciting to share at the end of this episode. And here it is, guys. For those of you in the comment section that drop the comment Money Mondays or I need a will in the comment section, our first 5 subscribers who comment and say that will be able to get a complimentary will from us. Myself, as well as Mr. Moeketsi Thomas, will be helping you guys by putting together your last will and testament. So please do make sure how you access getting this complimentary free will and testament by us. In the comment section, drop down either Money Mondays or I need a will in the comment section, but you have to be a subscriber in order to get this amazing opportunity. For me, Mr. Liberty Guy, I want to say thank you so much, and we'll see you at episode 7 on Money Mondays. Sunny up!
The money, what do you wanna do with the money? Spend it or invest it?
Signing